I would expect the dollar to strengthen and relative to those currencies, and gold and silver to strengthen relative to the dollar, which is what we've been seeing. If you look at least over a longer term, that was 5 or 10 years. I haven't looked at the chart in a while, but if you look at the dollar index versus gold and silver, the dollar index is doing pretty well. What is it, like 106, 107 now? I don't remember the number, but that's historically pretty high compared to what it's been since 2005, 2006. So we have a stronger dollar relative to other currencies, and we have gold at record highs and silver at levels that it's not at very often at all. So we'll continue to see that, right? We'll continue to see the dollar strengthening relative to other currencies, but the metal's not really caring and just going up anyway.
In this video, Rafi Farber from the Endgame Investor mentions that the dollar index, currently around 107, is historically high compared to levels since 2005 and 2006. Farber highlights that gold is at record highs despite the stronger dollar relative to other currencies, and silver is at uncommon high levels. Silver presents a compelling investment opportunity despite its recent price decline to around $30.30 per troy ounce. Despite silver's rally to an 11-year high earlier in the week, many investors remained cautious and refrained from heavy investment, anticipating potential volatility due to the Fed's meeting minutes and upcoming economic data releases. This cautious stance limited the sell-off's extent, but did not prevent a significant price correction. Despite the Bank of Japan's $60 billion intervention, Farber notes that the yen has weakened. From a technical viewpoint, Rafi Farber suggests that a potential Asian financial crisis, similar to the one in 1997, could lead to increased demand for silver due to currency devaluations. He emphasizes the importance of monitoring the yen and market dynamics, as history indicates precious metals may rise significantly in such events. In recent months, the Japanese yen has depreciated significantly against major currencies, especially the US dollar. Since the beginning of 2024, the yen has weakened to levels not seen in recent years and has reached 30-year lows. The Silver Institute's 2024 World Silver Survey confirms what I anticipated. The global silver market continues to grapple with a supply deficit. The report estimates a deficit of 17% in 2024, which builds upon the deficits observed in the previous 2 years. This trend underscores the growing pressure on the existing silver supply to meet the ever-increasing demand. However, Rafi Farber reflects on Alasdair MacLeod's insights regarding China's impact on silver pricing. He finds the relationship between Chinese premiums and silver prices intricate and needs a clear correlation. Now we present the clips of Rafi Farber's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
So what brought me in this direction? I think Alasdair MacLeod wrote about this a few times, of premiums in China and how China is taking over the pricing of silver. Maybe that's true. I don't know. He's more of an expert on that angle of the market than I am. But I looked at from Gold Charts R Us, the website, and I took a look at Chinese premiums, Shanghai over New York, and then tried to correlate them with the silver price. I couldn't find any correlation. Sometimes there was a discount, sometimes silver prices were high, sometimes there was a Chinese premium, and other times silver prices were low. I mean, it was really hard to tell. But then I was like, okay, so Asia, and Alasdair was saying that the Chinese are getting worried because we're on the brink of some kind of Asian financial crisis. If you look at the yen. So I was like, okay, so what happened to silver in the last Asian financial crisis? So I went back to 1997, and I saw that the Asian financial crisis really kicked off in 1997, in July 1997, with the devaluation of the baht. Right? It comes from these corners that people don't even know what a baht is, where they can't even locate Thailand. It's the currency of Thailand. So they devalued, and then that led to a whole bunch of other devaluations of these small Asian countries. And then when you devalue a currency, it just means you're printing more of it. And then the purchasing power goes down. So if the purchasing power of the currency goes down, then the purchasing power of the money itself, which is gold and silver, goes up. So what was silver doing back then? Well, it was doubling from July 1997, from the very point. That was when silver bottomed. From that point until a few months later, maybe 6-7 months later, silver had doubled from about 420 to 740. Not quite doubling, but close. So with the yen back at 157 per dollar, about 3 weeks after this big Bank of Japan intervention, right? That costs something like $60 billion that they're burning through their dollar cash reserves. So now we're back weak and on the yen. And if the yen weakens anymore, then Japan's main trading partners in Asia are going to have trade imbalances that they can't deal with politically. And their exporters will get upset, and then they have to devalue in order to keep pace with the yen. And so you have a competitive devaluation in Asian currencies. And what's going to happen? I mean, the Asians are going to go for silver like they did last time. Last time it didn't last very long, but this time there's no dollar to fall back on. So it could be even more extreme. I don't know when it's going to start or if it has already started. This is why I watch the yen closely, and history is going to repeat itself. It always does. Not exactly the same way, but we can expect the metals to go higher. And just as always, you've got to be patient and understand the logic of what's playing out. If there is a competitive devaluation in Asian currencies, and they are backed by the dollar in the sense that these Asian central banks have dollar reserves, right? So there's probably going to be a rush towards dollars. That doesn't mean that gold and silver prices are going to go down much, because there's a rush to gold and silver now among at least the banks or the financial players, not necessarily the public yet. So I would expect the dollar to strengthen and relative to those currencies, and gold and silver to strengthen relative to the dollar, which is what we've been seeing, right? If you look at least over a longer term, it was 5 or 10 years. I haven't looked at the chart in a while, but if you look at the dollar index versus gold and silver, the dollar index is doing pretty well. What is it, like 106, 107? I don't remember the number. But that's historically pretty high compared to what it's been since 2005, 2006. So we have a stronger dollar relative to other currencies, and we have gold and silver, gold at record highs, and silver at levels that it's not at very often at all. So we'll continue to see that, right? We'll continue to see the dollar strengthening relative to other currencies, but the metal's not really caring and just going up anyway.
Regarding declining premiums and low ETF holdings, Rafi Farber suggests an early stage in the market. He predicts a bullish phase for silver once it surpasses resistance levels compared to other commodities. Additionally, he anticipates a decline in the gold-silver ratio as silver gains liquidity in consumer transactions, possibly resulting in a 15-to-1 ratio. Silver and other metals experienced significant price increases this year, with silver gaining more than 25% since the beginning of 2024, stated Saxo Bank in its latest market report. So far this year, silver has outperformed gold and ranked as one of the top-performing major commodities. In addition, the Bloomberg Commodity Index is rising towards its third monthly increase for the first time since 2022, when inflation was over 8%. The index has seen a 4% increase in May alone, setting the stage for its strongest performance since July 2023. While shifting focus to the next aspect, Farber predicts a shift in investor sentiment toward gold and silver, once stock prices struggle or inflation diminishes portfolio values significantly. Let's get back to the interview.
I don't know exactly where we are, but we are not where we were with silver squeeze, even though we are there numerically in the dollar range. We're not there in terms of excitement, which gives us a lot more fuel to the rise, right? Like not slope of a wall of worry, right? Wall of worry. You have more fuel the less people know about it. Premiums are down. I think junk silver is at 9% as opposed to what it was at the top of like 45%. And ETFs are still draining. SLV is still very low holdings. So we're at the very beginning here. And even though we're at 30, we're still not quite through resistance on a silver versus commodities scale, right? So we can look at silver being 30 and be like, oh yeah, silver's in a bull market. But if it's not higher than other commodities or relative to other commodities, then we're not really in a silver bull market. We're just in a commodities bull market. So we're at a resistance in silver versus commodities right now. And the only time it was higher than this was during the lockdown period when things were a little bit nutty. So if we just cut that out and say, that was insanity, and look at normal-ish, at least in context of what normal seems to us, which is pretty weird anyway, then we are at a triple top resistance. And once we break through that, then I think silver will be in a bull market in terms of other commodities. So that's where I think we are. And we should see the gold to silver ratio descend as price inflation gets worse and worse. Maybe we'll talk about this later, because as I was doing some research and I saw that George Gammon had made a video of trying to exchange gold and silver in Argentina. And he found that silver was actually a lot more liquid than gold. He couldn't get currency. He couldn't get a functional currency in exchange for gold at market, anywhere near market levels, which makes sense because gold for a consumer is not very liquid. It's liquid for banks for bank money, but on a consumer level, you'll need silver, which is why when gold derivatives no longer work, or currencies we call them, when they no longer work, you're going to have to go to silver, and that's going to be the market force that drives us closer to a 15-to-1 ratio. Well, that makes sense because most of them are invested in these assets, in stocks and tech stocks and whatever it is. They log into their brokerage accounts on Interactive Brokers or TD Ameritrade, and they see a dollar number there, and they imagine how much wealth they could purchase with that stuff, with those dollars that they say that their brokerage accounts are worth. So why would anyone care what the price of gold and silver are if they're doing fine, right? They really start panicking, or at least before they panic, they get interested in gold and silver. When is that? When their stocks aren't doing so well, right? And their brokerage accounts are a lot less than they thought they would be. And then they suddenly realize they're like, well, gold and silver are heading higher, and inflation is what they call inflation, right? Rising consumer prices are getting worse. And these gold bugs are suddenly they're increasing their purchasing power. Maybe I should look at that. But there's no reason for them to even look at it. If, let's say, gold was $400 an ounce and the Dow was, instead of 40,000, 400,000, they still wouldn't look at it. That's to do with the ratio. And if you look at the ratio of silver or gold to stocks are still doing much better than gold since very much since 2011. But even recently, it's still very, very low. That's why the panic will really come all at once, as it did not all at once on the same day, but it'll come like a snowball. And once the Dow to gold ratio, or the S&P to gold ratio, whatever ratio you want to choose, once gold really starts outperforming, and incidentally, it has been outperforming since 1971. If you look at a chart of gold versus stocks versus the Dow, since 1971, gold is outperforming, but not since 2011, the last 12, 13 years. Once that changes, you'll get a change of heart from the public, the investing public. But it's not going to happen until stocks really start struggling, or inflation eats into the value of their portfolios to such a degree that it doesn't even matter that stocks are rising.
The World Bank, in its Commodity Outlook 2024, said silver prices are forecast to increase by 7% in 2024 and a further 4% in 2025. Considering the increasing demand in the silver market, how do you envision silver's role in investment portfolios evolving in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.